Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's take a look at the charts. Well, we're almost there, and we are doing this recording on Thursday evening after the market closed rather than Friday. So we have another trading day this week, but due to travel commitments, we needed to get it done a little bit earlier. So here we are. And one thing you may notice if you've been watching these recordings is the chart is a little more crowded. I've added a new zigzag here. So where we've been talking about 3 zigzags going off these tariff tantrum lows, we have another zigzag in the C wave of the 3rd zigzag. So that is another complex C wave. And we hit that target today, which basically coincides with all these other C waves. You can see all 4 of them converging right here at those February highs. We've been talking about this for weeks, that the market was likely to go up and hit the February highs, even though it didn't feel like we were going to do that. But that's what the chart said, and that's where we went. So once we hit these February highs, then we'll have to take another look and see if we can break these highs and move higher. But that's why we talk about zigzags. And then with the added complexity of this triangle in here, if you're not familiar with what complex zigzags are, etc., you definitely want to get a copy of this software. You can get a copy of it at hub.com, hubb.com. If you haven't gotten it already, if you're interested in Elliott Wave, this is the software you want. You can get a copy of it for free, and it has free Elliott Wave. And by the way, the Hub organization that produces this software is having a free webinar on Tuesday night. That's July 1st at 8 p.m. Eastern Time. It's called the AI Launch Code. They are the creators of AI that I utilize in my trading at ewotrader.com. If you want to see what's new and cool in the AI world, again, it's free. You can click on the link there or look at the link underneath this recording. It's something that you don't want to miss. These guys have been on the forefront of AI in the world of technical analysis going all the way back to 2020. So make sure you attend that event, AI Launch Code, on Tuesday, July 1st at 8 p.m. Eastern Time. All right, so getting back to the chart of the S&P, basically we're here with the February highs, and we'll have to see what happens from here. If I add the moving averages on, you can see that we're a tiny bit overbought with the close at today's highs. Maybe we need to calm down just a little bit. I wouldn't be surprised if we have a little bit of sideways movement here, a little bit of a consolidation following this last move up that started with a gap here at the beginning of the week. And being at those February highs, maybe it's time for the market to take a little bit of a pause. If we go on and look at the VIX, we have broken below that 17.5 level, heading back down possibly to the 15 level. That could propel us a little bit higher. Last time we tried to do that, we got turned back rather abruptly in the middle of June, and we turned and went up, but we couldn't break the 22.5 level, even on all the war stuff and everything else. We still turned and moved back down, following and bumping our head at 22.5. And now we're back below 15. You can see a little bit of separation from the 10-day moving average. Maybe there's some profit taking going into the weekend. We'll have to see how Friday's trade plays out. But if we break 15, then the next stop's going to be 12.5, as you know, on the VIX. And that goes all the way back to where we spent a good part of the time last summer, moving in through June, July, and then we got some more volatility into August. So perhaps that means there's a little bit more to the upside, but I would be a little cautious as we are reaching those February highs. We might get new highs, and then all the headlines will be the market's reaching new highs, et cetera, blah, blah, blah. And when all that kind of stuff comes out, it brings in some of the retail traders, and that's likely when you're going to get a correction. So again, a little bit cautious at these heightened levels. Let's take a look at the Dow, the DIA, which I still find quite interesting. I'm going to show you the chart of the Qs in a moment. I pose this question: where would you rather be? Looking at the Dow, we came down. We had this triangle. We broke out of it. We tested the point of the triangle. Classic Elliott Wave consolidating triangle rules. Happened to coincide exactly with support at the 420 level and coincided with the 50-day moving average. So we broke out, tested a triangle, tested support, and tested the 50-day moving average all at the same spot, and we've rallied higher from there. And what I was saying was, you see all this clean air here up to resistance at 450. Would you rather trade the Dow with all this potential clean air, or going to look at the chart of the Qs? If the Qs could break to a new high and go on and look at the chart, all that clean air, or would you rather trade that as the Qs move to new highs? Well, we're there as well. So we broke those February highs on the Qs. We haven't broken them in the S&P yet, but we did on the Qs. Everybody's back in the Mag 7 and the high-tech stuff. So where are you? We have an active wave 3 is colored green, so it's still qualified but not confirmed, which means we could still go higher in the wave 3. So that's an interesting question of whether or not you would rather be in the Qs moving higher in clean air, or playing catch up in the Dow moving in clean air. I find that pretty interesting. If we take a look at the DMI on the Qs, it's setting up rather nicely. You can see the ADX is turned higher. We have good separation between the two directional indicators. However, we have not yet broken that 20 level on the ADX. We're right there. But I really want to see that ADX break above 20 and have the separation maintained between the two directional indicators. I've seen a lot of times where the ADX will go up to 20 and roll over. So it's got to break it. But if it does, maybe there's even more room to run in the Qs. So we'll wait and see how that plays out. And then looking at the IWM, we talked about that in Trade Finder, and we'll talk more about Trade Finder in a moment if you don't know what I'm talking about. But we're back up to the wave 4 highs here on the IWM. We got turned back from the 61.8% level, to me, the strongest of all fib levels. It doesn't surprise me that that acted as a point of resistance. We came back down, tested the point of this triangle breakout, and we're back above the 10-day moving average, and we're ready to try to break above that wave 4 high. If we can, I don't think it's too long before we hit 220 on the IWM. And if we're going to get that high, there isn't really any resistance before we move up to the highs at 230. So even though I'm a little cautious right now at the previous market highs, maybe we need to get a little bit above those again before we get a correction as we suck in all the retail traders that get brought in by all the headlines of the market and new highs, etc. Taking a look at the dollar. The dollar is a little bit scary, so maybe throwing just a tiny bit of water on the mix here. I've been talking about this over and over again. I didn't want to see the dollar break this level at 97.5, but it did today. Do we get follow through on that? Are we going to come down to this wave 5 low down to 92.5? And what I mentioned is I thought if the dollar broke lower initially, it'd be viewed as a good thing. Companies have so much international exposure from the currency exchange rate, et cetera, that would be viewed as a positive thing for the equities market. But then if we continue down towards this wave 5, at some point, people are going to get nervous and say, wait a minute, what's going on with the dollar? Are we losing the dollar? Is it not the currency of last resort anymore? And then all of a sudden, I think it becomes a negative. So the initial break I thought would be a positive, but if we continue down, I think that could be a little bit of a negative. So we're going to have to keep a close eye on the dollar moving forward. Let's move to the bond market. And if we take a look at TLT, we've stayed in this trend channel. I talked about that last week, where we had come to the bottom of the trend channel, and that should have brought us back up to this B wave, retracing the C wave of the zigzag. Classic, again, Elliott wave zigzag rules, and that's exactly what has happened since we talked last. We're moving up. We're really pretty much there. Are we going to stay in this trend channel? How much further can we go? So the rules of the zigzag are normally you come back and retrace the C wave, and then sometimes the highest percentage chance is you retrace the C wave, but then sometimes you retrace the entire zigzag, which means we could possibly come up to this level, this 0 point here around 90, where the zigzag to the downside actually started. If we can continue higher, and this is TLT again, so that's prices on the 20-year, prices and yields move inversely, so prices going up, yields going down. That's another supportive factor for the markets. And while we're talking about that, last week we showed, and we got some really positive commentary about this, some macro charts from the folks at Hub, those same data scientists at the Hub organization that give us the AI signals on this software platform, hub.com. And you can see on this macro chart here that we are continuing up. There's the green, that's the expansion phase. And over in the left-hand column gives you the coloring designation of what those different colored lines mean. The two that I look at most are the green line, which is expansion, and the red line, which is contraction. And notice we've had just a little bit of a tick down on expansion and a little bit of tick up on contraction. We're still in expansive mode. It's still on top, but a little bit of a narrowing from where last week we were moving up with expansion and not so moving to the upside on contraction. So I think that's another thing to be concerned about. And then the next chart that I wanted to show you, also updating you from what we showed last week, is the SPX and Fed liquidity. And we talked about the blue line being liquidity. Notice it's leveled off. Does that have something to do with all the political rhetoric going on with the current administration wanting to replace Chairman Powell, et cetera, where they've been quietly injecting liquidity? All of a sudden they've stopped. We know they haven't cut rates yet. Maybe we get that in September. Some of the Fed governors are breaking ranks. At least 3 of them have said they've been in favor of a July cut. Still not really priced in. Still looking towards September. But notice the difference, and it's the divergence you always want to look at. So the S&P has gone up, as evidenced by the SPX, but yet we've had a little bit of a leveling off in liquidity. So I think that gives you a little bit of a pause, and the lag time there is normally about 2 weeks. So again, we could get to a point where we have a little bit of at least sideways movement, if not a pullback here in the not too distant future. I know a lot of you like the TNX, so we'll take a look at that. That is rates on the 10-year, and you can see we are breaking down. So exact opposite, because TNX is showing rates on the 10-year where TLT is showing prices on the 20-year. So rates going down. We are just slightly uninverted on the yield curve. We are getting a little bit more interest rate for holding things on the longer term, which is how it ought to work, but not dramatically so. So it's not like the all clear sign. We don't have a real steep yield curve. It's still rather flat, but still in the vein that it ought to be. And then if we go ahead and take a look at the metals, we look at GLD. So we go here and you can see that we have expanded this triangle here on GLD. I've mentioned this in the past. GLD loves to do this: consolidate, breakout, consolidate, and breakout. Even though that we have a potential wave 5 move to the upside, the wave 4 is still active, so it hasn't been turned purple yet. So the wave 4 could technically go lower, and we have to respect, even though we could come up with a million reasons why GLD or gold could break to the upside, we still have to respect the fact that it could potentially break lower, and we could even take out this wave 4 low. Back here in May, we came down, tested the 50-day moving average. The software labeled the wave 4. And then we've just continued to consolidate here after a brief move to the upside. So we got to watch gold. And then silver, we've talked about that. Would it play catch up? Well, it had a better day today than GLD did. You can see this nice move to the upside here above the 10-day moving average. So it is still in catch up mode. So we had this gap up, consolidated 2 days, gapped up again, consolidated a bit, gapped up, came back down a little, got below the 10-day moving average. No follow-through day. I talk about these rules all the time. You have to have a follow-through or confirmation day when you break major point of support, major moving average, etc. We didn't get it, and we turned and ran right back up in silver. So silver up today while gold is consolidating. We'll see if that can continue. This wave 3 is still active, which means we could go higher in silver. We'll keep an eye on those, see how that plays out. And then if we move over to energy, we'll take a look at UNG, something that we've been talking about quite a bit in our Trade Finder meetings. I mentioned Trade Finder a bit earlier. You can see this break to the downside here. We had a little bit of a false breakout higher here, and then moving down. We did come down to support at 15 here and then bounced up. And we actually talked about this as a idea in Trade Finder this week. And if you're wondering what I mean by Trade Finder, is something we do every week on Tuesday at 1 p.m. Eastern time. It's live during market hours, 1 p.m. Eastern time. We look at the markets, we look for trade ideas, and we have a live Q&A. We have a great community. They ask wonderful questions. They all interact with each other. So if you're looking for a community to share ideas, that's the place to be. So if you haven't joined Trade Finder, you can see the link on your screen now, or you can go to our website at ewotrader.com and sign up there. You want to be a part of Trade Finder. Again, great community to be with. And the idea that we had this week, actually, it was a post. There's a difference between posts and ideas. You can find out more about that during Trade Finder, is that maybe we would hold this level at 15 on natural gas and perhaps bounce a little bit higher. So far, that's played out. We came down, hit right at the 15 level on the low, and you can see that we closed where the open was. So we opened here, traded lower, came back, suggests that maybe there's going to be a continuation to the upside in UNG. So that's the kind of stuff we talk about in Trade Finder. So join us next week. Looking at oil, as evidenced by the USO, as you would expect with kind of the war rhetoric toning down just a bit. We had a big move back down. We got a little higher than I thought we would. I've been saying this for months and months that I felt like this year we would stay between 60 and 80. I thought that's where we would be in a trading range for oil most of the year. We came down, tested those lows in April, and we got a little bit above 80 back in January. We got a little bit above it with the concerns about Iran maybe blocking off the Straits of Hormuz. I think it's how it's pronounced. I keep saying that. I don't know for sure if I'm pronouncing that correctly. Could definitely affect the transportation of oil if they were to do that. But China gets a lot of oil from Iran, and they're like, don't do that. And so nobody really expects that they're going to. And so the price of oil came back down rather dramatically. What goes vertically up oftentimes comes vertically back down. We got too far from the 10-day moving averages. The rules you hear week in, week out. Same thing we talk about to our subscribers at ewotrader.com every single week. But we gapped down here. So we came down, tested the 50-day moving average. Maybe we get a little bit more of a recoil. We had a doji today. So maybe we get a little bit of a move back up towards this 10-day moving average. I don't necessarily think we come back and test 80 unless something changes on the war front, et cetera. But for now, we did give back a lot of that vertical move up. So I do think we consolidate a bit here with maybe a tiny bit of a drift higher. We'll see how that plays out as well. Now let's move over and look at the crypto space. I like to look at BITB. As you know, I know a lot of you like IBIT. They're both very liquid in the world of options. So either one, I don't see a dramatic difference between the two. We had this bit of a triangle here. We broke to the downside, kind of tested this 50-day moving average, and now we're back up testing the point of the triangle. So we followed the rules of a triangle. We broke out. We came back and tested it. Where is Bitcoin going to go from here? Well, at this point in time from the charts, it's anybody's guess. You can see there's no Elliott wave pattern labeled here. So this is a corrective phase, which is the triangle. And we wait for the next impulsive phase to be labeled. And when you have a triangle, you don't know. The one thing you do know is whatever direction you break, you're probably coming back to test the point of the breakout. So we've done that. Now we wait and let it tell us where we're going to go from here. If we look at Ethereum, as evidenced by the ETHW, we did break below the 50-day moving average. But once again, the rules that I talk about, no follow-through day. It was a lone day down here and then immediately back above the 50-day moving average. So we're right at the 10-day moving average. Also a doji here. So I do think we're going to get some movement in the crypto space here over the next few days. I have no idea which direction it's going to be, but it was key that we didn't have follow through on this break below the 50-day moving average or on the at least the ETHW, whether or not it's in Ethereum in general. We were in danger of giving all of this vertical move back where we went just straight up from 12.5 to 17.5. Again, what goes vertically up oftentimes comes vertically lower. That was what we were in danger of seeing, but for now, we're safe. Again, we'll see how things play out over the next couple of trading days. All right, now let's go ahead and move to some of the stocks that y'all ask about. And the first one that we'll take a look at is Tesla. And by the way, we're giving away each and every month this year, just like we did last year, one of our free level 3 subscription that counts our time strategy, which is sideways strategies. It's income based, so we're looking at calendar spreads, butterflies, iron condors, stuff like that, things that move sideways and generate a little bit of income. Also our volatility strategy, which is looking for breakouts of those triangles that I talked about, kind of how I made my name in the world of options, is coming up with a very unique way of doing strangles on triangle breakouts, best delta gamma acceleration out of the breakouts, and then our AI-based impulse strategy. Again, you want to learn more about AI, you got to attend that AI launch code event on Tuesday. But coming back and looking at Tesla, just as a reminder, to enter the drawing for the giveaway, all you have to do is leave a comment underneath this video. That's it. Be a subscriber and enter a comment. We're approaching 50,000 subscribers. Love to hit that. Please tell your friends that you want them to hit subscribe as well. But if you're a subscriber and you leave a comment, you're in the drawing this week. So Tesla had the breakout here on the release of the robo-taxi. That went pretty well. Some people, the naysayers, were saying, well, it was a very limited rollout. It was very heavily monitored, etc. Well, I hope so. I mean, I hope when they're sending out driverless cars that they're going to be monitoring it. So I don't know how that was a big surprise. So some were saying that it wasn't that big a deal, but nothing really went wrong. So we had a breakout. We've come back. We're exactly testing the point of this breakout on Tesla. So the question remains, is this a breakout, testing the breakout, and then we turn and go higher? Or was this a false breakout and then we break lower? Again, something's still ready to happen in Tesla. We don't know the direction yet. If you follow Elliott wave rules, when you have a triangle, you don't pay attention to the 5-wave pattern or any impulse pattern. Even a zigzag triangle is number one. It can break out either direction. And there's one of 3 ways that it can break out. We can break out, test the breakout, and continue higher. We can just break out and take off in that direction. Or we can have a false breakout where the big move is the opposite direction. If you're a Tesla fan, you don't want to see that. We are still holding above the 50-day moving average, but we're going to see a fairly significant move in Tesla still, I believe, but we still don't know what direction it's going to be. If we can turn and bounce, then maybe that is just all it was a test of the breakout, and we continue higher from here. Let's go look at AMD, another one of the stocks that you all asked for. Again, just leave a comment underneath this. I read them all. I read everyone every week. I answer as many as I can, time and travel permitted, but I always read them. And AMD, which was kind of left for dead here not that long ago. You can see moving into the lows at the tariff tantrum lows in April, but it had already been trending lower going back to last winter and was way behind things. And then we had this triangle here. We broke up. We're at a 70%, 76% actually, wave 4, which is getting very close to the point where this becomes disqualified. Technically, Elliott left 78.6 in because that's a fib level. But he also made notes that when the wave 4 moved more than 70%, he felt like there's a great chance that pattern was going to be relabeled. The thing to watch here, I think, is on AMD. We're a little overbought now. You can see the separation from the 10-day moving average. We had a nice 45-degree angle breakout, and then we've gone a little bit vertical. So I'd be a little cautious now on AMD. It's had a nice move since those April lows. We do have more room to run, and if we can break these areas here at 145, we should get back up here towards this 165 level rather quickly, but maybe we might need to pause a little bit here in the interim. Maybe something along these lines that occurred back last winter as we go sideways. That would be the ideal scenario. You do a little backing and filling here right at a major point of resistance before breaking higher. You don't want to see a resistance point break when you're already overbought because they tend not to hold. So some sideways movement here before a potential move higher would be ideal. Looking at NVIDIA, which has just continued to motor ahead. Again, kind of had for this downside breakout. These are the strangles that I talked about coming from a triangle. So you had a triangle, big downside breakout. We actually broke down in a zigzag pattern, just Elliott wave all over the place here on NVIDIA. So we load made the lows around 90. I remember people saying, gosh, if I could get NVIDIA down around 100 again, I would be all in. I wonder how many people actually did that, because you did have that opportunity, but it was a little scary when we broke below 100, wasn't it? But we've turned and had a nice move, consolidated in this triangle, and then a pretty vertical move. Now we're breaking above that resistance area at 150. And again, you can see all that clean air there. The only problem is, once again, we're a little overbought here from the 10-day moving average. So same thing we just talked about with AMD. Maybe we need some backing and filling. So perhaps there is some more room to run in the Qs with the way these tech stocks look after maybe a little bit of a pause. Microsoft, maybe a slightly different story. Might need a little more of a pause here because, again, you can see we went in a little bit more than a 45-degree angle. So off this surprise earnings report back here in April, we've had one heck of a move. Once again, a little bit overbought from the 10-day moving average. A little too much separation for my liking there. And we hit 500 or right at it, just under 500. It seemed destined that once we got the break above 450, I mentioned in the past, I'd be surprised if we didn't hit 500. Well, here we are, and a little bit overbought. Taking a look at the chart in Netflix, I had mentioned in the past that with the economy weakening, maybe everybody been running to Netflix, kind of like we did during the pandemic, where everybody stayed home and watched Netflix and they had a big move higher. Well, the economy is not as bad as we thought, and yet Netflix is still powering higher. When we take a look at the chart, it's still in an active wave 3, which means it could go higher. And when you look at it from a technical standpoint, we came up here to 1200 and we had a pretty nice consolidation here, and then we've broken higher. The 10-day moving average is moving up. It's still pretty good in concert with the 50-day moving average, so it's not real overbought at this point in time, even though we've gone slightly vertical over the last few days. So once again, maybe Netflix needs a little bit of a pause as well before continuing to move higher. We take a look at a chart at Google. They've kind of gotten past all of their regulatory stuff. At least it's not in the headlines so much anymore. And we had a little bit of a bounce move higher here. This wave 5 pattern has been disqualified with this wave 4 going past 78.6%. But look at the chart from a technical standpoint. We got right up here to resistance, right in this area around 170, which acted as support resistance back in March. Broke above it, tested it, broke above it, came back, tested it again, tested the 50-day moving average, and we've broken to the upside here on Google. I kind of like Google to go higher, at least up towards the 190 level. Looks like there's a little bit of clean air here as we had a pretty quick move down from 190 to 170. So I think Google goes a little bit higher. Palantir. I know a lot of you like Palantir, and President Trump mentioned Palantir was going to get some government contracts, et cetera, and that put a bid underneath the stock. So when we take a look at it, it's had a pretty nice run off of those tariff tantrum lows in April as well. Not really too vertical, just kind of a nice steady climb, full of impulses and corrections, classic Elliott wave stuff. The wave 5 is extended 74%. We go back and look at the wave 4, it contracted 50%, which means we could go up to 100% extension here. We're not really as overbought on Palantir as we are on some other stocks as well. So I think that we have a little bit more room to run here on Palantir. So kind of like that chart also. And then you guys ask about it. Last week we looked at uranium and you said, hey, how about looking at platinum? So that's what we'll do. And wow, I can see why you want to look at the chart. Look how vertical that move is. Big move coming off the May area around 90 straight up to 130, really in about 2 weeks. That's a little too vertical for me. That's a little too vertical, too fast. We're too far from the 10-day moving average. We've gone too far vertically, and there's separation that's getting a little bit extreme between the 10 and the 50-day moving averages. I think platinum needs to calm down just a little bit as well. So maybe the market just needs a pause in general here before deciding if we're going to resume those highs and continue up in the market, or if we're going to go sideways and correct. So a little bit of influx here. Thanks for spending some time with us. Please hit that like button, hit subscribe. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also